GPs in private equity, real estate, venture capital, and hedge funds. And I have also our honorable speakers today to represent our investors panel. And we'll start with a round of introductions. Tuğba, could you please join us with a brief intro?
Hi, Nadia. Thank you. So my name is Dr. Tuğba Kalafatoğlu, a doctor entrepreneur. I'm a third generation international entrepreneur. So I founded my first company at the age of 12. And since then, I have been advising, working with the entrepreneurs around the world. I have been in 113 countries in the world. Of course, right now, I don't travel anywhere. So this is something new for me. So what I do and my associates, we do, and my partners, we do help the entrepreneurs for in any phases to start their business, to grow their businesses, and to go international. So being an entrepreneur and also seeing that working with my entrepreneurs right now 24/7 with the investors and entrepreneurs in both sides. So I also work with the investors too to help give them the money to capitals, to entrepreneurs, and also help the entrepreneurs to get the money from investors. So I'm happy to be here to help out to our viewers what they can do in the pandemic. Thank you.
Thank you so much, Tuğba. And Anisha, could you also introduce yourself?
Thank you, Nadia. Hi, everyone. My name is Anisha Patnaik. I run a company called LegStart. We provide tech legal support to startups. So our products and services provide support to early stage companies, incubators, accelerators, and investors. So we are on both sides of the table at times. So right from working with entrepreneurs in structuring stock options, structuring funding transactions, to working with incubators and accelerators in structuring their incentive models and advising investors, we kind of cover the entire early stage ecosystem gamut. I personally have been a lawyer for 16 years now, specializing in investment transactions. Over the last 3 months, I've been working very closely with several funds, especially in the development sector, to structure financing instruments. And I hope to add some value to this esteemed panel today.
Thank you so much, Anisha. And Magnus, could you also introduce yourself?
Yeah. Hi, everyone. Great to talk. And thank you for the invitation. I'm Magnus, come from Norway originally, started my career in the military, then was at Harvard for a few years, then worked at McKinsey with technology for many years before starting Zalora.com, which is the biggest fashion e-commerce company in Southeast Asia, which we later sold. And recently we've been building Antler.co. Antler works with exceptional people to build the company from scratch all across the globe. We're present in Europe, in Southeast Asia, India, China, Australia, Africa, US, and South America. So we literally work with exceptional individuals who want to solve new important problems and build fast-growing tech companies around them. And we invest from pre-seed to Series C. Very excited to kind of share our perspectives on what companies to build, how to build great companies at this point of time, and also, general our learnings in terms of investing throughout this pandemic and this crisis and the situation we're in right now. We invested in and built about 60 new companies over the last few months, so have had some experience within doing that in this unprecedented time. So thank you for having me.
Thank you so much, Magnus. And Gary, could you also join us with a brief intro?
Yep. So my name's Gary Fowler, and I've been a startup entrepreneur for 30 years. My latest company I did with David Yang from Russia, who's the founder of Abby. He's my partner in Yva and a venture fund we have together. One of my companies that I was the original management team of was sold about 7 months ago for a little over $1 billion. Click Software, an Israeli company. I was an MBA, MIT Skolkovo professor. I have GSD Venture Studios, one of the top AI venture studios in the world right now. And our thing is to curate incredible AI technology and bring the technology to market. I lived in Russia 14 years and the US in Silicon Valley, so spent a bit of time Actually went back to school in my late 40s to Moscow State University for 5 years to see if I could do it, and I did it. So have had a robust experience. And 15 companies later. So I've had 15 companies so far.
Great. Thank you, Gary. And John, could you also join us?
He's on mute, Nadia.
Yeah, hi. Thank you, Nadia. I've got about 3 decades of experience, 15 years in the corporate world, got tired of working for other people. So in 2000, I did my first startup, which I exited. Thereafter, I joined a friend to start an airline in India. We IPO'd. My third startup, I failed miserably after raising $9 million. And then I joined India's largest company to manage a $250 million fund and did that for about 4.5 years. Came back to Bangalore, and today I mentor a lot of startups. I've done 30 mentorships in the past 5 years. I now only mentor startups solving prop tech problems. So happy to be here to share my experience. It's been an interesting journey of the past 6 months during this lockdown.
Thank you, John. And Nitin, could you also join us?
Hi, Nadia, and thank you for having me on this panel, and a warm welcome to everyone as well. I am Nitin Shaktar. I'm the founder and CEO of the Green Capital Single Family Office. We are a 300 million assets under management single family office, a proprietary capital. We invest across private equity, public equity, venture capital, real estate, bonds, and alternative assets. I am the third generation of the family office and the chief principal and the investment officer. I complete today, I think, 22 years of investing experience. I bought my first investments in 1998. I've seen 3 different cycles. I'm happy and lucky to see this pandemic as well, because I always call this as an opportunity. So this is my 3rd decade cycle. And we invest about 70% of our assets are in India and Southeast Asia, and about 30% of our assets are in the US, UK, Euro, and a bit of asset exposure in Tokyo, Hong Kong, and Singapore. I think that's in a nutshell about us. I'm happy to look at the panel and take everyone's viewpoints as well. Thank you.
Thank you so much, Nitin. And Dugba, so you have a great entrepreneurial experience yourself, and currently we have a huge paradigm shift technological across all the segments. So what type of sectors you think are the most promising? What should be in the focus of attention of investors? Maybe you have even some contrarian view there.
I mean, especially right now, thank you, Nadia, especially right now with the pandemic, what happened to the people, because they stay home. And it's not just like in one country, around the world, everyone was in quarantine. So in this time, most of the streamline education and hobbies is just like grow like a big time. But at the same time, all the latest studies in the consumer reports that have been done by the Ernst & Young and McKinsey and the latest World Economic Forum, they found that consumers right now, they are ready to try any products. It's like a 52%, which is pretty high. So right now, if we are talking about like what is the niche markets, I personally, as an entrepreneur and coming from a 3rd generation, that my grandparents have been on the depression and everything, I see the pandemics and the crisis as turning the challenges into the opportunities. Because this is a time that people also are ready to listen. And especially right now, what's happening around the world, the social issues are the most important right now for around the world. People want to hear. People are ready to listen to you. So if we are talking about the industries, especially sustainable business is growing. I mean, it has been growing past 10 years, but right now, if you are planning to start any business, and if you have any idea in sustainable business, this is the time to start. At the same time, if you are any technology business that you are trying to come up with the idea for app, or you are trying to come with using the artificial intelligence, this is also the perfect time. And especially if you are coming something that people going to use every day, is going to make their everyday problem as a solution, this is the perfect time. I've been working some investors from the California and also in China and also in France. that they are coming up with some of the apps that is going to help the people for make their life much more easier. The same time, I'm working some American companies that they are coming with sustainable businesses, and also some companies from Norway and Denmark. So sustainable business, the reason is now people are like to use something that because they are much more cautious regarding their health, and people like to spend their money that is going to help them to be much more healthier. And also at the same time, if you are doing something for health too, it can be hobbies, app, health. These are also something that is such a growing business that, the many entrepreneurs, they can look at it.
Thank you, Tuba and Nitin. So you have also quite wide experience and primarily in Asia, Southeast Asia as well. So what would be your comment? Which sectors you are looking for, and what are your investment criteria for venture capital?
I'll be honest enough to admit I wish I had a crystal ball and I could tell you right now that would make us all a lot of money. But I think honestly, from the initial viewpoints of what is happening over the last 4 or 5 months, my personal viewpoint, and I could sort of put my head against the gun here, is that I think health and hygiene will do what it happened to security after 9/11. And I thought that that was a very drastic societal change. And it really changed the paradigm of how we travel, what was security, and what it created in terms of consumer behavior. So I see similar terms of health and hygiene creating those kind of areas. We've suddenly decided that the whole world needs to be more healthier, more hygienic, more cleaner. It's become part of our life. It was subconsciously there. Many people were practicing it, but today the whole world in unison is subconsciously practicing it. In a sense that even if I get my hand towards my face at this point in time, I subconsciously take it back for some reason or the other. So I think that's a societal change that will happen, and niche businesses within that. Of course, we've already invested in certain businesses like Zoom, DoorDash, Clorox, health hygiene, video conferencing, but those are much discovered at this point in time. There's nothing much to talk about them. But I genuinely feel that any business that goes to consumer and not the consumer going to them, that time has come for that business at this point. Thank you.
And did you make any changes into your allocation strategy between these different types of asset classes? So you mentioned real estate, venture, and different other types. So did you reconsider your strategy during this time?
Actually, surprisingly, we didn't anticipate the pandemic, but we anticipated an overvaluation. So we were about 60 to 70% in cash, which we've only done once in 10 years. So I cannot anticipate a pandemic, but I can anticipate that the valuation and this exercise is going too higher, and you can't see it. You can only see downfalls here. So we are one of the few who are now deploying cash in March and April, and happy that this opportunity came. We've selectively deployed in public equities, in pharma, in IT, in the businesses which we know that have a lot of cash flow. We've also selectively deployed now looking at assets in Asia and UK and US, where we think the companies will be able to sustain and survive. We've not done too much we've actually increased exposure to equity. We are constantly now going to increase exposure on private equity and venture capital if the valuation and the funds that come to us are now reasonable. And it's historically seen that any private equity or venture capital fund of a vintage of a recession year gives great returns over 7-8 years as we go along. That's what we intend to do over the next quarter.
Thank you. And Gary, so what is in the top list of your priorities in terms of innovative companies you would like to support, and what are your investment criteria there?
Yeah, so, I agree with Nitin that this is an unprecedented time. About 6 months ago, McKinsey came out and said 92% of the companies worldwide have come up with digital transformation strategies. What's happened over the last 4 months? Look at Zoom. 5 months, they've gone from 30 million to 300 million daily users. This is an unprecedented time. This transformation that was going to take 10 years has happened virtually in months. So anything that helps that, and again, I'm in artificial intelligence. I founded Yva, which is about a $700 million work tech company that I founded 4 years ago. Anything that deals with remote workers, think about it. How many of us, look at it where we are today. 6 months ago, 1 year ago, we would be meeting in person in all kinds of different locations. Now we're brought together in one place. Think about technologies that can optimize and make that better. So in terms of where we are and what I'm doing, we're in artificial intelligence that helps optimize processes in all kinds of different ways. Google-like searches for the personal cloud, security, facial recognition, advertising technology to detect fraud, aging in place. I mean, areas that, so, I mean, think about the aging in place issue, right? In the US alone, there are 46 million individuals 65 years or older. This is a phenomenal opportunity that's largely been ignored. So what we want to do is we want to look at opportunities for that. I just wrote an article in Forbes and actually in Medium about the digital transformation post-COVID that I'll share. But I think, you know, from my standpoint, I mean, artificial intelligence is truly the new electricity, and each one of us need to be plugged into it solid because it's a wave of the future. There's just too much data, and we need to synthesize that data to make sense in it for each one of us.
Thank you, Gary. And Magnus, what are your top priorities in terms of new businesses you're looking at and maybe sectors, segments?
Well, so I think there are, well, so first of all, I think that, you know, the type of people that we have on this call and the type of people who have been commented about kind of investing into, you know, areas of growth and exceptional people kind of solving new problems, you know, that I think is kind of an area where, you know, new people who haven't, you know, invested in that segment before find it very interesting because it's somewhat counter-cyclical, right? If you look at what, for example, we are doing, you know, we're always working every day to find individuals that are resolving important problems and building technology companies around them. And of course, right now, you know, we've seen a number of kind of new opportunities to contribute and drive kind of global impact through doing that. And I think that more and more investors are waking up to that as an opportunity because it's not driven by kind of a 1 year or half a year or a 1.5 year you know, cycles or changes in the market, but it's driven literally by, you know, solving larger problems and building that over a 5 to 10 year period. So, you know, I really resonate with what a lot of people said. I think in terms of specific opportunities and sectors where we've seen a tremendous amount of growth lately, and I think we'll see over the next few years as well. You know, some of them has already been mentioned, like remote work, you know, various types of ways to put things online, whether it's kind of vertical marketplaces, e-commerce obviously is continuing to grow incredibly fast, where there are a number of new niches that have opened up. Supply chain, I think people are thinking about supply chain in a very different way right now than they did before the crisis, and we've kind of seen where there are value creation opportunities to make this better. Health tech obviously is a humongous area. I think we've seen for the first time some of those new technologies that have currently been in the lab actually going out there and now delivering solutions, right? You know, we can see a number of the vaccine candidates that are out there right now. They're actually, you know, they're built on top of cutting edge genome technology solutions, which literally have been in the lab up until now, but now they're solving important problems, and you will productize this science much quicker than you would have imagined. So within health tech, there's a number of huge opportunities, whether it's kind of really deep tech problems, but also just like we had a portfolio company who was doing something very specific within the health tech industry, and they pivoted during the crisis to become a telehealth company because there are a number of people who have other diseases than the coronavirus who are worried now about going to the hospital, but they can easily be served online by a doctor. It's simpler issues, issuing prescriptions, doing that type of stuff that don't put you in danger by actually having to go to the hospital. So, you know, a lot of these opportunities within those spaces, we've seen industry take, I think, decades worth of growth and change has happened in a few weeks and months. And, you know, these are not changes that are there for now during the pandemic. I think these changes will actually last from now and onwards. Like, I think the way everyone works, for example, has changed forever. We'll still work together and we'll still see each other in the offices. We'll still fly and see each other, but we'll also be much more efficient in terms of how we spend our time. Same with health tech, right? I think the way, that has changed forever. So those are the areas we are really kind of looking closely at right now and solving a lot of new problems. And over the last 2 to 3 months, we worked with founders, about 60 teams to build companies around these problems, and we want to do more. When that's said, I also want to kind of address that the traditional industries that are now suffering will also pick up again, right? So there's also kind of, and there's still tremendous growth potential and change, right? So for example, if you look at the real estate market right now, that is definitely taking a hit, right? If you look at commercial real estate, private real estate, it's taking a hit. But the real estate industry as such, and the construction industry is kind of still stuck it's kind of stuck utilizing processes and technology which is a decade, 20 years old. And even if right now there is not the market to kind of solve that, it will be over the next 10 years. If you have a 10-year horizon on your investment, you don't only look at the kind of near-term opportunities, but you also look at those opportunities that was there before the pandemic, and there are a lot of those as well. I think in most markets, digitalization has really happened to a very small part of the economy. I think something like 6 or 7% of the world economy now is done digitally online, and so we're just at the very beginning within all industries. But I just want to mention a few that I think have risen and are growing very fast throughout this pandemic.
Thank you, Magnus. And John, so what are your top priorities while you're working with businesses which apply for your advice?
Thank you, Nadia. Magnus referred to real estate, and I set up Asia's first PropTech accelerator. We look at very disruptive young companies to take them to the next level. What's interesting is in India, real estate is going to hit $1 trillion in the next 10 years. And real estate has the lowest adoption of technology anywhere in the world. And this is validated by McKinsey. I have a contrarian view. 6 of my startups that I'm mentoring out of the 33 have raised money in the past 4 months. And I believe that sanity has finally come back to the investors. They are investing in fundamentally strong businesses with strong fundamentals which are not chasing valuation, but creating value. And these companies are primarily in the enterprise space. So I'm seeing a huge surge in the real estate sector, which now has come to terms with the fact that the only way they can survive and not be dinosaurs is by depleting inefficiencies by adopting technology. And I'm seeing that now, every week we are hosting one webinar with about 2,000 real estate developers across India. And now we've been reached out to by the African PropTech Association, by the Middle East PropTech Association, because suddenly we become the flavor of the region because we're doing exactly what was needed 5 years back. In this space, one area that I'm actually focusing on is contactless applications. People don't want to touch. They want to touch each other. They don't want to touch elevators. They don't want to touch boom barriers. They don't want to touch doors. People don't want to get into hotels and touch doors. And we've now actually found 2 companies which are actually creating contactless solution. And surprises, the big guys, the elevator companies, which earlier were the prima donnas who said, listen, it's my way or the highway, are now coming to terms and saying, listen, can you get your startups to actually work with us? Because these startups can actually deliver far cost-efficient solutions to these people. So I'm looking at contactless as a big opportunity in addition to PropTech. The second area, India is at a very interesting juncture. It's got hit by COVID, but more important, things have got aggravated at the border by our Chinese neighbors. And yesterday, the Indian government banned 59 Chinese apps. TikTok banned, Share It banned, UC Browser banned. And that's given a huge impetus for the Make in India movement overnight. You won't believe it. Companies like Chingari, which are competition to TikTok, have garnered 2 million, 5 million followers with just one government's decision to ban Chinese applications. So this challenge is a phenomenal opportunity for startups in the content space, And since I'm focused primarily in prop tech, my companies are actually booming in these challenging times.
Perfect. Thank you, John. And Nisha, so what are your top priorities? What startups you're looking at? What sector segments?
So thank you, Nadia. I resonate with almost everything that everyone said so far. But the first thing that comes to my mind is, exactly what John said. In less than 24 hours, we've been flooded with queries from entrepreneurs, startups, investors even, saying they would be willing to invest, or they would be co-founders, or start a startup that could replace any of the apps that have been banned by the government of India yesterday. So there is this sudden flurry of activities and a lot of investment opportunities there. But that set aside, apart from that, what we have been seeing over the last few months is, like Tuba said, solving any solution that's solving your everyday problem. There has been a paradigm shift in consumer behavior, right? And any company that can cater to that is what we are seeing a lot of traction with. For example, Max pointed out about telemedicine. In India, I have seen telemedicine companies fail up to 2 years back. And today, health tech and telemedicine have become the most popular sectors to invest in. Apart from that, online wellness is something that has also picked up, and we are seeing a lot of opportunities there. E-commerce, of course, is garnering up. We haven't yet seen investment opportunities there, but when I speak to other investors and companies, especially in India, I'm told that given how things are moving and with the whole contactless attitude, e-commerce is going to be the next thing for the economy. And then there is a lot of interesting opportunities, as Marx pointed out, in the supply chain and ag tech, as they call it now. We are seeing a lot of interesting opportunities arising around insurances, warehousing, a lot of development sector funds investing in supply chain management, catering to the rural markets, and anybody who's able to pivot and create opportunities, whether be it in manufacturing or skill development for the rural market. So we're seeing a lot of action even there.
Thank you so much to all. And my next question to all of you is more on the company level. So what's important in terms of business model for you to consider it as investment? So what should startups be focused on in terms of their management and execution? So Tupa, what would be your recommendation and advice?
I think for any business, first thing that I look, and the investors that I work with, we want to have the person as a story. What I mean is a story, like a storytelling in entrepreneurship. You need to have a story. What is the reason that you are coming up with this idea? What this business is going to help out to others? And as I said on my previous response, are you really solving a problem? I don't mean that, you have to come up with something brand new. You can also do something better than your competition have done, but you need to come something that, is something really important, added value. So I think first thing that I always look at it, and I always ask them, first question, what is the story behind this product or a service? And my second question is, what is the value proposition? What kind of value that your product or services are adding? And the third important that I always look at it, can we trust this person? The trust is the most important deal right now, especially with the pandemic right now. Many people, they have lost their businesses, maybe they lost their customers. So, and also the other question that when I'm looking for the trust, are you really passionate? Are you going to give up? So I think in this time, I have seen that some of the investors, they didn't want to invest the money that we were thinking to plan to invest. But we have seen it in the pandemic, some companies, they became like in a panic mode. And we were like, you know what? No, we need someone that they can stay strong, they are still passionate, and they can make this, turmoil, this, challenges into the opportunities. I think right now with the pandemic, instead of much more of like a business mind, we are also looking for the personality too. I think that's the key nowadays, that we do pay attention and we are looking from the entrepreneurs and the businesses.
Thank you, Tuğba. And Magnus, what would be your recommendation?
Well, so I think that, the number one thing for early stage investors like ourselves is just ensuring that you have an incredible team, right? So, it starts off, if you're a single founder, ensure that you surround yourself with people that have different spikes than yourself. Ensure that you put together an incredibly strong kind of co-founding team. We know as a fact that, 2 to 3 person co-founding teams just completely outperform one person co-founding teams, and especially if they also have different skill sets and spikes. So the first thing we look at is the team, because in the end, the team can pivot their business, and they are the one who also will come up with the business model and execute on it, right? So it becomes the most important unit of everything you do. So that's the first thing we look at. The second is then kind of validating the business model that they're working on. I think the best way, obviously, to do that is to see that they're actually solving a real problem, and that there's real demand for what they are, the problem they're trying to solve, and the solution to that. Or if they're already in business and they started growing, that this is not kind of marketing driven, but it's actually driven by a real kind of pent up demand for that solution. It's the same for deep tech to more simpler B2C solutions. There's a number of kind of businesses out there that are built by incredible teams, but they're growing and they have revenue, but it's kind of built off of a strong salesperson or really strong marketing, or spending a lot of marketing money, and not from kind of really providing a superior product that is solving an important problem. So that's kind of the second thing we look at, is like, how validated is the business model? Is it really solving a problem? Is it scalable? That's the second thing. And I think if you got those two things right, then then it becomes all about the size of the opportunity, right? So you can have those things right, but you might be working on something which, in best case scenario, will still be small, and then you need to, that might still be a good investment, but then you need to know what you're investing in, and ensure that the valuation and the valuation and what you're expecting from that investment is in line with what it can become. Typically, what we are looking for is highly scalable businesses, meaning businesses that can capture a region or grow globally. I think within the space that we are in, that is incredibly important, because we know when you invest early that even if you have an incredible team and you have a truly validated business model, there is a small risk that it will still not succeed. So it's important that the bets that you take, ensure that if they do well, they become incredibly big. That will offset, some of those losses that you have. But in the end, we strongly believe that if you have the right team that are working on a really validated business model that is truly scalable, you reduce the kind of vast majority of the risk of early stage venture capital, and that's where most of the mistakes are done. So that's what we look at. We are not that concerned with what industry it's in. We believe there are huge opportunities to disrupt and build, great businesses across all industries. We do care about the ESG footprint of our investments, which I think is important for everyone. Not only because obviously it has tremendous positive impact on the world, but on top of that, I think that the generation of investments into kind of negative impact companies, is over, and you'll just see kind of lower returns on these types of investments. Not only kind of a negative impact on the world, but also lower returns. So, those are some of the things that we're looking at, and I think, as many people mentioned already in the panel here, the opportunities are larger than ever. So excited about it.
Thank you, Magnus. And Gary, what are your key investment criteria? What's important for the team to show?
Yeah, so this is the KISS principle, right? Keep it simple, stupid. So when we look at it, what's it all about? It's about, do they have product market fit? Have they done customer development, as Magnus said? And are people willing to grab it out of their hands? So what we look at, is it something they've just come up with an idea, or is it something the market really wants? And it's really important because I started the Skolkovo Startup Academy in Moscow. I was one of the co-founders of that and one of the top accelerators in GVA. And one of the things we have with thousands of companies coming through is that great ideas, amazing idea, but nobody wants them, right? And they spend a lot of money developing. So are people willing to grab it out of the hands? The other thing, I've just written an article in Forbes and also in Medium about intergenerational, right? You need some people with the gray hairs that have had experience and understand the market. Multicultural, so different backgrounds, because diverse teams seem to perform better. And regionally diverse. So having a team, for instance, if you were in the Ukraine or Russia or Belarus in terms of technology development, the prices are a lot better, or India, right? The prices are a lot better and you can find far, far better skill sets. So having that kind of team where you've got those scales in place. The other thing is grit, right? Is a team, I don't remember who mentioned it, is a team willing to go down through and to get through it, the tough times? Are they that kind of a team? Do they have the right stuff to be able to succeed? So I look at that, and do you believe them? I look at if they are technologists and a marketeer. I like mixed teams where you have two different perspectives and you have people that are great on each side. In the case of Yva with David Yang, he performed the job as CTO for me as a CEO. So having somebody that's incredibly smart on one side and people that can actually present the company and get the buzz. So the last thing that's really important is revenue. So when I look at the bottom line, I don't care where they're located. I don't care if they're in Tver. I don't care if they're in Moscow. I don't care if they're in Bangalore. Can they get revenue in their market? And that means to me, they've got some product market fit. Any kind of revenue, MOUs, serious MOUs, something that shows that they're going to succeed. So, that's what I look at.
Thank you, Gary. And Nitin, what is your perspective in that? What are your key criteria?
So I think we are very clear on three things, right? So first is, earlier it was show me the valuation. And as an investor now, it is about show me the cash. So, honestly, you're going to back somebody who either has a lot of cash on books or has investors, has a lot of cash to hold. Because these situations will not just die down even in June and July and suddenly you think the demand will pick up overnight and all that. It will not happen. This is a very long drawn out affair. It could last for a year, year and a half. Many business models could change of existing industries, which means that there could be examples of corporates going haywire with their planning. They could think of something, it will not work, and then they finally come across on a solution. I'll give you an example. Many people right now in the world think that producing PPEs and medical kits is the way to go and let's get into it. But if everyone goes into it and follows into it, then where's the margin? Where's the outlier advantage? Right? So that is not industries that we are looking to invest in. We are looking for entrepreneurs who can think like an outlier, who can come back and say that, look, I think I should invest in a Chinese pork producing factory, something like Broadiant Foods, where the demand is less and the supply is very limited and the demand is large, of course, barring another outbreak of swine flu, which will be very interesting in the whole world if that happens. But of course, barring said that, so those kind of outlying advantages we'd like to look at. We'd like to look at people who are willing to pivot, because it's very, very important in today's context. I'm aware of John and how he's gone with LATOKEN and EIH and all that. How you pivot yourself and your business is very important. And you need to think on your feet. You need to think that you don't have all the answers. And if you have to change according to the circumstances, then you should change the business according to that. And I'm giving you examples of airlines, hotels, which might have to think about their business models now. they're still coming back to the traditional ways of how work was done. I don't think that will change. It might change. I think airlines, hotels might come to a different model. You need to be a great entrepreneur to look at distressed sectors and then change the pivot models. So if you're looking for those kind of entrepreneurs, then I think that's where the bet is. But I think most importantly, it's a cash and liquidity situation, because without that, you don't have the guts to even dream. So you should have that and then dream, and I think that's the way to go about it.
Thank you, Nitin. And John, what is your take on that?
So I come from a view where, in the past 3.5 years, we've looked very closely at 1,600 plus companies. And almost 90% of the companies are founded by brilliant techies who've got great solutions and then go looking to solve problems. What do I mean by that? They have solutions that nobody wants to pay for. And there are great techies who have solutions that the world doesn't believe they need right now. I'll give an example of 2 companies which I'm mentioning right now. One company is a company called Nanorama, which is actually creating perhaps the only company of its kind in Asia, which is helping you cocoon yourself from the hazards of electromagnetic radiation. Because with 4G, where I sit right now, the electromagnetic radiation in my house was 16,000 joules. The permissible levels are 1,000. And he had a great solution, but he had no business model. He didn't have a sense of business. We liked him, and we know that with 5G coming in, density of towers are going to go through the roof. And we've invested in him, mentored him, and he's now got a model which he's one of the 6 companies who's raised money during the COVID time. Another youngster who was an ex-MIT dropout, IIT dropout, company called Snaptrude. He came to us and said, listen, I'm going to disrupt AutoCAD. And we looked at him and said, sweet kid, let's see your plan. And great techie, didn't know how to build a business, but we believed in the audacity of his dreams and actually backed him, and he's raised money from leading venture capitals in India. And he's on his way to actually disrupt AutoCAD. If you look at the largest startup in the world, it's a startup out of India called Jio. He was going to take on the might of Airtel, Vodafone, which were well-established telecom brands. And people said, he's lost it. How can he take on the might of established giants? And he has brought every telecom player to its knees. Nitin referred to a company that a friend of mine started called LATOKEN. They said, listen, you guys are smoking serious stuff. You can't take on Yva.ai, Jet Airways, and Sahara. In 3 years, we became the 2nd largest airline in India with a 21% market share, and we brought the big ones to their knees. So we're looking for people who have boldness of dreams, who have great attitude, and who've got a product that people are willing to pay for. And that is something that is a constant between the 6 companies that I've seen now, which have raised money, and the balance 30 that have also raised money. So we're looking at, great teams. We've seen phenomenal teams, break their back because they didn't have staying power. And I think Gary or somebody alluded to that. If you don't have resilience, I in my 3rd startup raised $9 million. And the biggest mistake I made is I hired my co-founders at the insistence of my investor. Big mistake I made. Your co-founders have to be trusted as much as you trust your wife and your life. A big mistake. And within 2 years, I realized that they were people coming from the corporate world. Our DNAs didn't match, our vision didn't match, and that was a big mistake. So we look for very strong symbiotic teams. We look for opportunities that may seem like they don't exist right now. And we have enough cases in India where people are doing this. This 3rd company we got is actually saving 2 billion liters of water every month in India. And people said, nobody is going to invest in this company. They have raised $2.5 million. So we are looking for entrepreneurs with ballsy attitude, who are looking at solving problems that people are willing to pay for, and who, one of the things we insist is actually they must have powerful IPs, because that becomes a strong moat for people to keep away from you. So these are some things that we look for. And of course, the gut.
Yeah, sure. Thank you so much, John. And Anisha, what is in top of your priorities for key investment criteria?
So I unfortunately do not make investments like everybody else on this panel. But over the last 16 years of working with startups, entrepreneurs, what I have seen that matters the most, and most of them have kind of been mentioned on the panel here today. But what matters the most is why. Why are they doing this? Why is the entrepreneur, the founding team, doing what they're doing? Because if they're doing it just to get out of the whole rigmarole of their regular corporate jobs, then that's not good enough a reason, because then maybe you don't have the passion and you will not have the resilience to sustain, as well as think on your feet and pivot as and when required, right? So it's very important to understand from the team as to the reason why they're doing this. It just cannot be that maybe this sounds like a great idea, and if I manage to fundraise, maybe I'll manage to convince a few people to become my customers, right? So just like John said, you can't think backward. You got to think. You got to have an idea, be passionate about it, and obviously have customers who are willing to pay for it. The second thing is the founding team itself. Very important for them to have complementary skills. I have seen startups that have just had brilliant tech minds, but have not been able to take off because they did not have the right person to help them with marketing, help them with fundraising, all of that. They're just great at developing products, but they just couldn't sell it. Or they couldn't even find investors because they're not good at selling their idea either. So it's important to have a team with contrasting and complementary skills, because just being able to develop a product is not enough. These are my two inputs.
Perfect. Thank you very much, Anisha. And we start our pitch competition now. So we have two participants today. And Arun, are you ready? With a brief introduction on yourself and sharing your pitch deck with your company solution. Hello, Arun.
Yep, great. How are you? Thank you for having me. My name is Arun Prakash. I'm the CFO of Yva.ai, an early investor and employee. And we are a company based in Austin, Texas, with offices in Toronto and Washington, D.C. So let me share the PowerPoint. And so we develop a customer experience platform for large enterprise. Customer experience is often called CX, and so we'll use that term. And basically the problem that is out there today is that customers for brands, what we call lifestyle brands like financial services, insurance, automotive, telecom, things that people use every day and for a long time, have evolved from being single channel to going to omni-channel. And it's not good enough to just have multiple touch points for your customers, but behind the scenes, the data has to talk to each other and provide the latest offers to the customer in any channel that they come into, whether it's the phone or the store. And so that requires a lot of data work and technology on the back end to provide that great customer experience. So as it's been discussed in this panel, digital commerce is evolving, and it's really driving the essence of the customer experience. And so large companies and any company needs to really understand where their customers are, how they're engaged, and be able to measure that, and then deliver the right actions and offers to drive revenue. They can no longer rely on personas or artificial business rules that don't react to what's actually happening in real time. So the market for this CX technology is quite large, $500 billion, according to IDC. A lot of it in services, but a big chunk in software. We look at the fastest growing area of this is AI-driven customer engagement, where we play. We look at CX in three categories. You have to track the customer, you have to understand the customer, and you have to then engage with the customer. And the biggest gap in this market is understanding the customer. The best solutions we have today are surveys and cohort-based forecasting or business rules. So what we've tried to do here is build a system that's driven on first-party data to really get the answer of where the customer is. So when you think about the best way to do that, we have invented a measure called Cerebri Values, which is the first true measure of customer engagement. We filed a patent on it, which has been allowed, and we have a big patent portfolio of technology as well. This is one of 5 patents that have been allowed, with 19 more pending. But basically, the way that customers behave is that they act, and they have transactions and interactions with marketing and call centers. And then the company looks for reactions by asking them, how was your experience? Do you recommend me to your friends? And they look for answers in their spend to forecast LTV. But really what all this means is that they have a bunch of scores in their enterprise, and they don't have a good way to use these scores for the best effect. So what we've done is we've built a measure called the Cerebri value, which is a measure of customer commitment. It takes all the transactions and interactions that have happened and make that the primary driver of the measurement. And we put the answer in dollars to show you what your near-term spend of every customer is going to be on an individual basis. So this is no longer a cohort-based measure. This is individualized, and it can be used to predict near-term spend, which influences what they're going to do next. Are they going to buy a certain product? Are they going to upsell? Are they going to renew a contract? All these things that drive revenue, which is at the end of the day what our enterprises want. So this is what the interface looks like. It's usable by an individual targeted salesperson or support person, or by a marketer. They have other screens to roll up these customers into large cohorts to drive marketing at scale that's personalized. We have the Cerebri value, which is our NPS killer or survey killer. It's the measure of their near-term spend relative to where they have spent in the past. And we also recommend next actions to take in multiple sequences in the future, not just one thing, and show you the effects of other KPIs. We can do that because we have the data. And then we can have multiple KPIs for different measures, such as overall engagement, churn, specific products, etc. Just on commentary on post-COVID world, you know, we've our companies are well suited for, our customers are well suited for taking advantage of the disruption. They have the scale and the innovation to drive personalization across examples such as tailored credit cards or certain plans. They're all moving at the speed of digital and moving, you know, faster on transformation. And one thing that we also do is we bring the economic projections to our technology. We've been forecasting economic conditions, and that affects customers in our target verticals. So economics is now important to predict what's going to happen and how that might affect purchasing behavior. Some results. So we've got 3 signed customers for about 1.3 million of ARR so far, and a few pilots in the works with some large companies. These are some results of our impact. We can serve multiple use cases. The key is, do we have the data and do we understand the customer? And so we've helped banks with lending, automotive companies sell more cars, life insurance to better understand how they're going to drive their more spend. And again, we've worked with a large G7 central bank to help them forecast GDP. The team is well experienced. We have a lot of experience in software startups. Our CEO, Jean, has his 3rd startup from blank sheet of paper. Alain has been in startups from a tech perspective for a long time and is very innovative, leading our technology team. My background is in private equity, but also in control systems, so I understand the complex technologies and the business models around that. And then we've got Vasilis, who has got a lot of experience in financial services, and James has a lot of experience in enterprise. Our total team is 35 across Austin, Toronto, and DC. And so that's what I have to say.
Thank you so much. And the next project, Jacob, would you also introduce it?
Hi, everyone.
Yeah, hello. Just start with a brief introduction on yourself and the project, and you can start with the screen sharing.
Hi, everyone. Myself, Jacob. I'm from C-Mercury. C-Mercury is basically an AI-powered marketing automation suite. I'm sure when it comes to the business of marketing automation, there are hundreds of players in the space. Then you all could be thinking, what is a core differentiator over here? What we do is like we are deploying deep AI capabilities for intelligent e-commerce engagement for various brands. I'm just taking a use case which our customers normally face. I'm just taking Ms. Tina as a prospect customer, an e-commerce brand is trying to reach. So the biggest question before the brand is like whether the brand should reach the customer on a Monday or a Tuesday or a Friday. How about reaching her morning or tea break or late night? I'm not sure whether, she ideally fits for an email campaign or a short message or a push notification, or don't even send her any message. Maybe you need to engage her only when she comes into the website. What is the ideally fit product recommendation for her? And again, what is the potential she as a customer offers for me, and what should be the money I should be spending on Tina as a customer for me, as a prospect for me? So we address the pain areas faced by 4 key stakeholders of the e-commerce space. One, obviously the brands. We give them an omni-channel experience across devices and channels. And for marketers, it's a SaaS-based all-in-one platform. You need not switch between multiple engines, and it has got a powerful ML layer which gives highly contextual one-on-one campaign recommendations. And for the business owners, it gives precise consumer insights, saving a lot of time and money. And most importantly, for the end customer, the engine offers highly contextual, intelligent campaigns powered by AI and ML algorithms. So this is the product roadmap. We already have the customer journey layer in place where the web analytical data, the channels through which the consumers comes, that is already collated, and it dresses up the user profile using the demographic data, and we are capturing the campaign engagement data as well as the landing page consumer behaviors, and it has got an ML layer which runs on top of that. And the ultimate goal is to decide what could be the right audience for a particular campaign, the content selection, the time favorability, and the channel selection also. Now, why Seamercury? That's a very important question when you have a lot of players in the space. As against a traditional notification, now I'm just giving a comparative performance analysis using Seamercury intelligent notifications. We have like a performance uplift in the range of 10 to 200% by using Seamercury intelligent notifications. Average open rates, you can see 10% uplift, click rates almost like 75% click rate uplift, and revenue uplift per 1,000 notifications almost 173%. Average order value, obviously we have seen like it goes on slightly on the lower side, predominantly because more number of transactions happens. And the orders per 1,000 notifications, we have seen 200% uplift. And bear in mind that we have seen like we are able to charge 67% more to our end customers using our technology. In spite of all this, we are able to give this kind of an uplift. The market size, automation space, it is $5.6 billion US. Addressable market is 1.25 billion, and 33 million US dollar is a target for 22-23. We are the first company to offer ML-based product recommendations via emails and browser notifications in the Asia region. Hyper-personalized campaigns, 100% billable customers. We have 2 awards already in place, and we are incubated at the prestigious Indian Institute of Management, Life Kozhikode. This is a glimpse of the dashboard. And this is the market traction. Already we are deploying 5,000 plus campaigns, 300 million plus web hits, solution used by 100 plus customers, and churn rate as low as 2%. Major brands we work with in the India region: Hopscotch, Sivami, Clovia, Bajaj, Finserv, CAMS. I'm sure those who are from the India region, these names are very familiar. Couple of international brands also like Halal Trip from Singapore. Business canvas model. Obviously, the primary revenue is going to drive from the subscription model as well as based on the devices we connect. And consumer segments predominantly drives from e-commerce, BFSI, education, hospital, and retail. The competitive landscape, we have players who work in silos. We come exactly to the centerpiece, which has got the MLR and the AI layer, as well as cross-channel capabilities with the conditional messaging capabilities. The leadership team, the core team, we are 3. And Minu comes from working with international brands like Philips and Microsoft. And myself, I have 19 years experience. Rijo comes with in-depth expertise into email marketing and marketing automation. We have an advisory board from the University of Miami and Indian Institute of Management. They have been guiding us on the AI and the ML side of the business. These are our revenue targets. 33 million is what we envision to achieve in 22-23. And our deployment plans, 2 million is our target to raise. And we basically will be deploying these funds into AI and business development, talent acquisition for AI and business development, and additional business market penetrations in India and Singapore, market expansion into LATAM, MENA, Russia, and US regions. And technology upgradation, service application level optimizations, and launching of additional modules will also be part of the investment process. Thank you. Thank you, everyone.
Thank you, Jacob. And now I pass the floor to our investor judges if they have any general feedback or questions. Tukpa, are you ready to with your questions or feedback?
Yes, thank you guys for both of you. I think the first thing, when the investors are always looking at, not just for the business model. First of all, the business model has to be explained really in clear and in a detailed and transparent way. So one thing that I really liked it, Jacob said, he also explained what the competitions are. If not all the investors know every industry in the world. So I think when you are giving some information, it's also nice state what kind of like a competition out there, who are you facing to? And I think I really like that. So I don't really have much questions right now because I think it was nice to get the more business, information. But I think what I would really suggest them, if I will be investing today, I think I will be asking more questions regarding what the company, they are planning to do. And also, as I said, I also like to know, what is the potential size, even that they explain it, but it wasn't really clear for me that, I think you need to be really paying more attention. And also I suggest for both of them, when you are presenting, you need to be also like showing that you are really excited about the product and everything. And both of them, they had a great team, but it's also, the second part, they explain their advisory board too, but also you need to explain more. I think because maybe I'm also coming from the academic side too and teaching the business models around the world. I am kind of picky, but I think I have more questions like, okay, for both of them, what your product is different than your competition. As a customer, and this is a question for each of them, as a customer, why will I purchase yours instead of your competition? And I want you to explain to me in one sentence, like ours makes this. Ours makes this that is different than our competition. That's the reason that as me, as a customer, I'm going to choose yours instead of XYZ. So this is my one question only for each of them. Why, as a customer, I am going to purchase yours instead of XYZ? Thank you.
Thank you. And Arun, are you ready to answer?
Yeah, sure. So just on the last one, the reason that companies purchase us is because they want an end-to-end platform for running their customer experience models and answers. It's very akin to two analogies. Is think of an IT department that 10 years ago managed 200 servers in-house. Today manages their cloud strategy on a management platform with cloud partners. Similarly, we would take a company that has 200 AI models being run by 25, 30 data scientists to say, instead of doing that, manage those models on a platform that can optimize the models and drive them and make the data common across models to make it more manageable, sustainable for your organization. Another analogy, much simpler, is in the financial department. Instead of throwing around hundreds of Excel spreadsheets, companies procure software like adaptive planning to do planning of projections and forecasts so that they can have a single solution and instead focus on getting the right answer versus managing the problem.
Thank you. And Jacob, what would be your answer?
Yeah, our proposition can be explained in a single word as against competition: save money and save your customer. Because the traditional platforms, what we have seen, like it leads to a lot of fatigue factor to the end consumer. Here, the fatigue factor, we have case studies where the fatigue factor have literally come down to ground zero level, because we don't bombard them with any sort of notifications. For example, if I take email as a case study, I have some brands like Voila from India who used to deploy the traditional model and now switching to our predictive intelligent emails, where we have seen massive uplift in terms of customer engagement and the disengagement metrics, as for example, the unsubscriptions or the customer complaints, whenever they deploy a predictive intelligent campaign, have grown to the ground zero level. That is the big takeaway for our customers, and that's why we see a lot of e-commerce brands signing with us.
Thank you, Jacob. And Magnus, you also had some questions.
Yeah. Hey. First of all, thanks a lot for sharing, and obviously you're solving exciting opportunities. I've experienced both of them in my former career in e-commerce. So excited to see that. I had two questions, one for Arun and one for Jacob. So I'll just ask them, and then you can, I guess, Arun first and then Jacob after. So first, Arun, it would be interesting for me to understand a little bit more about how you understand the solution and the product and the problem it's solving. I would love to hear a little bit more about how you're scaling and how you're selling this and how you're onboarding customers. Just to understand how scalable it is, that would be amazing. And then Jacob, I saw your kind of revenue projections there. I was just wondering, if you wanted to, if you perhaps could talk a little bit about how you would go from that projections you have there to kind of, if you wanted to achieve 10x your ambition, your current ambition, like what would it take and how would you get there? So those are my two questions. Thank you.
Yeah, thanks, Magnus. So in terms of scaling, yeah, when we started, going after the large enterprise, it's never easy to scale, especially with the data that they have. So what we've done is, while working with them, we've built a lot of automation on our ingestion side, called the ingestion end of the platform, which allows us to better take the data that's in a bunch of databases and basically atomize them, and akin to what we do with telecom, which is take signals down into packets, and so that they can be more efficiently processed and reassembled later. So we're doing that analogy on the data side so that it can be more automated. It doesn't have to be a services project to get all the data organized. It can be much more efficient and scalable. And we're going to be able to deploy this soon on the web so that companies can upload their data to a secure cloud where we can quickly get them onboarded versus taking a few months, which has happened in the past. We have had examples where large enterprises have had clean data and we've been able to get them onboarded very quickly. So this problem is achievable, is solvable. It just has a couple ways to go about it over the coming years.
Yes, and Jacob?
Yeah, so I'm just sharing my screen for a minute. So what we have been thinking, like this goal, like 33 million by 2022-23 is a challenging goal. We are bootstrapped. We started fundraising pitches very recently only. So what we have been doing is, like, we wanted to be self-sustainable as much as possible. So what we have done is, like, we have identified the scope of extending the product solution to multiple markets, and as a first step, we have converted the entire application and the website into Arabic, and the entire application is localized for those markets. Now the entire MENA region, we are prepared to reach out. That itself should bring a sizable business. And next target is Spanish. So that itself, without any external funding, should help us to give a big boost in terms of more customer additions. And funding, obviously, at the end of the day, will be an icing on the cake. That is the roadmap.
Thank you. And Anisha, you also had some questions to the project?
Yes, thank you, Nadia. I actually wanted to understand or hear a little more about the founding team. So Arun, I saw your founding team, very experienced and qualified team, but I just wanted to hear the story. Like, how is it that all of you came together to start this business? Is everyone full-time? wanted to understand a little more about that. And same with Jacob, because I saw there were 2 members and an advisor on the leadership team. So just wanted to understand the founding team better.
Yeah, sure. So we've got about a total of just under 40 people total. We've all been full-time for a few years. Company's been around for about 4 years. So Jean and I met at the Capital Factory, which is an accelerator in Austin, Texas, for startups and new companies. We were both mentors there. Jean joined as a mentor after he sold his last company, and I joined after leaving. I was a partner at a private equity firm here in Austin, and wanted to get more involved in the startup scene. So we met there just when the idea of AI was starting to come out, and Cerebri came up through that. And Alain, the CTO, and Jean have known each other for longer. They met at Motorola, where Jean sold his first startup to, and they were both executives there. And they had become good friends, and always kind of envisioned to work together at some point, and finally got a chance to with Cerebri. Vasilis we brought in recently. He's in the DC area, just like Alain, and we met him, and we needed someone to kind of lead the execution of the technology. And James we met when we were we have a Toronto office for initially for technology, but then we said, let's start selling there. There's a lot of opportunities there, and we have 3 major customers in Canada. So we brought on James. We met him a few years ago as well, and to help us kind of organize on the go-to-market. So that's kind of how we all got together.
And everyone's working full time on this?
That's right. Yeah, full time for a few years now.
Thank you. And Jacob?
Yeah, in our case, our core team, we are 3 of us. And myself and Rijo, we are full-time. Minu is part-time. She is based out of Canada. So how we met is actually Rijo and myself, this is our second engagement we are coming to the. Initially, we were working on another project called, which was into email marketing. Then in 2016, we moved on and we created this marketing automation platform. Minu is my classmate for my graduate programs. She has been working with Microsoft for quite many years, and now she is based out of Canada. She is advising us on the platform, UI experience, designs on the websites, and the content strategy. And on the advisory front, obviously, Denny is there. Denny, he sits out of Australia, and he is helping us for the expansion to those markets. He comes from Infosys. I'm sure those from India, I'm sure this name will be very familiar. And rest of the people, Professor Keyur Purani, he is from Indian Institute of Management, Kozhikode, where we are getting incubated. He is our director of our incubation program. He has been kind enough to be part of our advisory board. And through IAMK, we got the relationship with the University of Miami AI team, data science team. And they are part of the advisory team who is closely working with us to develop new AI and ML capabilities around the application.
Thank you, Jacob. And Gary, do you have any feedback, questions?
Yeah, the thing is on the feedback. So there are a couple of things. One of, doing these pitches is about storytelling and relating that story. And it's good for raising money. It's good to capture your audience. The second thing is I call it the rule of 3s in terms of advisors. What kind of advisor? Now, Arun, you went to Stanford, I believe. I saw in your presentation. But the rule of 3s is you want to have somebody that has, as an advisor, a security background. It's going to come up, privacy concerns. I did it with every one of my AI companies that I've co-founded. It's going to come up. So a guy like Rick Orloff, the former chief security officer at Apple, is a good person to have on the team because it's going to come up as a question sooner or later. Then the third thing is, if you look at it, who's somebody that has had tremendous success and has name brand recognition today? So what kind of person? Somebody that's recently sold a company for $100, $200 million, $500 million, you can get it as an advisor. It really helps a lot. And it alleviates a lot of questions. So I like the presentations. The wow statement in the front end of the presentations as part of the storytelling is incredibly important. I had a long-range weather forecasting company, and I said, you can't control the weather, but you can control the impact on your business. And we were able to get Walmart, Target, Home Depot, Lowe's, etc. So you got to have a powerful statement coming in, a bit of storytelling. I think you've each got some interesting team members, but you want to highlight it a little bit. And I like the non-suit in Silicon Valley founders. It kind of gives it a kind of a edgy, youthful kind of a feel to it. So I try to avoid sport coats and ties and that kind of thing. So what I would do, I mean, you got incredible technology. You're in the right space. By the way, I wrote an article either in Forbes or I think in Forbes actually about the personalized experiences. And Arun, I started the first consulting company working with Vignette, if you remember at the time, and Broadvision. I started Broadiant. So I had the first company. I did Delta's website with Broadvision. So it's incredibly important. I just wrote an article, like I said, recently. I'll put it in the chat if you want to take a look at it, about personalized experiences and how it's incredibly important. You can get a lot more bang for the buck, a lot more revenue for a company by using AI in that kind of a way. The other thing is, Arun, both of you actually, is moving from the semi-supervised to unsupervised predictive quality. And I think you've done that. I'm not 100% sure. Knowledge graphs, variational autoencoders, ladder networks, clusterization, that kind of stuff. That's really hot. And and then finally, AI with emotions. So anyhow, if you guys have any questions, I'm happy to, I'll put in my email address here. If you're happy to ask, send me a note. I'm happy to help. But no, I think it's good. I mean, it ain't easy, but listen, you got, Arun, you got what, 1.3 million in revenue? That's a good sign. You're moving in the right direction.
Great,
Thank
thanks.
you, Gary. Yeah, Arun, you want to comment?
No, thank you. Great comments. Appreciate it.
And John, you also had questions.
Yeah, so, I agree with Gary. What was missing was the storytelling. And, there's a different way to present on Zoom. If you start with, just what problem you're solving, if you take a use case and you take somebody through it, people will get it. B is, startups which are bootstrapped have limited cash, limited intellectual bandwidth, limited physical infrastructure, limited physical resources. And, Arun, you were going after automobiles, you're going after banks, and Jacob, you were going after the Middle East, you were going after different parts of the world. I always believe that, get to a stage where you own depth in a geography or a vertical, build such strong defensibilities that, moving into another vertical becomes easier. Because, you just control everything there. And, and that's the POC of, traction in a market that you own and control. And that's how you show your differentiation. And that's my advice to you. But I think I agree with Gary. Look at storytelling in a far more interesting way so that the passion comes out. Arun, your customers are very different. The bank's problem you're solving is very different. The automobile's problem you're solving is very different. The DNA of people at the bank is very different to the DNA of a salesperson automobile company. And Jacob, Middle East behaves differently. You've got to change your script. You've got to move from right to left. Why would you guys want to not own and dominate a space that you're in and then explode?
Thank you. So do we have any comments here from the project?
Yeah, no, I think that's good overall. I appreciate that, John. Just I'll comment on how we've gone to market is basically the customers that we're working with. So we've built our solution. It's a horizontal solution, and what's in terms of technology, the problem we're solving. There's two customer problems. It's big purchases and ongoing small purchases. So cars, loans, insurance policies versus your wireless plan, your credit cards, etc. So that's the class of problem. So once we've solved that technologically, we can go into any vertical. Now the problem is selling into those verticals is challenging because you, like you said, you have to get to know the different people. So what we've done so far is actually each of our customer relationships has been come to us and has been through a sponsor. So it's involved little, missionary selling and more like, here's what we know you well, here's what we do. As we grow and we maybe take it to the next level and we build a more marketing and sales functionality, which we've heretofore hardly spent anything on, we need to go and do those things about focusing on a vertical and saying, okay, we've got some beachhead in this vertical, now let's go and sell into that vertical and invest into getting more customers that are repeatable and similar to what we've done before. So that's how we plan to do it. To date, we've been very opportunistic at an early stage for good reason.
Thank you. And Nitin, do you have any comments, questions, feedback?
Hi, I have a disclaimer to make before I make a comment. I'm not exactly a great technology investor, neither do I understand technology too much beyond requirements. I like to keep things slightly simple and slightly more traditional, but from what I've seen in the presentations and an in-person meeting and pitching is obviously very different from a digital pitch on Zoom. There's a lack of communication, but Jacob, I think that your space seems to me, and that's a personal viewpoint, it seems cluttered to me in the first viewpoint as an investor. So then I tend to hold back because I've seen examples of these over the years. And I've not seen too many great companies coming out of this category or building scale. They've been there, they've made revenue, they're sustaining, they're stable. But it's one of those categories which has not really shown real great throughput power or scale up power. And that's what I look for as an investor. Can this be a medium tertiary investment for me, or can this be an investment that I would love to do and I'm salivating over it and I'm getting juicy about it. I'm not going to talk to you and I'm going to speak to you because I don't get that feeling. That's my personal viewpoint. I could be wrong. That's an example of what my experiences have been as an investor. So I think my feedback is that whenever you're presenting a category where there's competition, you have to find uniqueness in your story, in yourself as an entrepreneur, in your team, or something which is unique about what you're trying to do. Because ultimately, it's not unique. I mean, I've seen examples of this before, right? So that's my feedback. I'm not sure whether it's the right feedback or not, but it just comes from our experience. For Arun, again, I'm not somebody who understands artificial intelligence. I tried to make myself learn about quantum computing. I gave up after half an hour. So I'm not the right person to comment or judge on the business, but I just feel that I need to see a lot more specific revenue in terms of breakup of categories. Which industries are you targeting specifically? What is your revenue model? What is the quarterly revenue model? What is the annual model? What is the retainer model? Because in a software, which is a service business, which is AI technically, I think dependency on revenue and sticky fingers with clients is very important. How can you show value for the annual contracts? Which is going to be a very tough challenge because companies are currently cutting down on services and trying to ensure that they're basic premises. So maybe I think after a year or two would be a better idea of indication of your revenue model. Right now it might be a bit volatile. I have no other specific comments to make. I mean, I'm open to receiving feedback as well or anything that you want to discuss. Thank you.
Thank you. Yeah, Arun?
Yeah, no, great comment. Just to speak on the revenue model. So we sell our solution on an annual recurring basis, and it's for use of our platform. Use of the platform, number of use cases, number of customers that are being processed, and number of seats that are using the software. So, but yeah, obviously not a lot of time to get into that, but happy to do so if anybody wants to follow up.
Jacob?
Yeah, thanks for that feedback, Nitin. So I know as such, if you take marketing automation, it's a very crowded space, but that's in spite that being a crowded space, we are trying to create a niche there by using our AI capabilities, and we have seen results, and that is giving good traction for end customers. And as I told you, like uh, scalability, once you have the application full-fledged, scalability of the application on a global level will not be a challenge for a SaaS-based platform. But I really thank for your feedbacks.
Perfect, thank you. So we've got all the feedbacks currently. So, and most of you just shared your preferred ways of communication for the follow-on communications. And our final round of questions is just about this type of digital events. If we have Zoom pitch competitions and online fundraising formats, how do you incorporate that into your strategies, into your investment processes, if you have such, and how does it impact your process? So, Tugba, do you have any feedback?
Yeah, hi, I think I always prefer face-to-face, so but now we are all being online, and Zoom is our way to talking with the people, doing our presentations. I agree, most of them that, they mentioned that the storytelling is everything. And when you are giving even your ideas and everything, because you are not really having your body language, the person, they cannot see your nonverbal communication. So when you are online, make sure that they can see it from your voice that you are excited. Like when you are trying to, because the same time you are selling your product, you are selling your service. The person on the other side, anywhere in the world, they have to see that you are passionate. You have to have a story. So I think the first thing you need to start with, why you did this, like why you start this business. And the other thing, my question that when I ask, you need to give the facts, because the people, especially I have been on judges also like last 2 months too. People have been watching back to back, and they are sitting on, here. Make sure that when you are trying to explain them, give the facts, like steps, kind of like a bullet points, like this, 1, 2, 3. Let me explain to you why the top 3 reasons that our product is better than our competitions. So this is, I think, most important thing, because you don't want to lose your audience, especially in the Zoom. The best way, I always say, practice, and also make sure that you have a mentor that you can ask them, and also practice in front of your family and friends, because I think this is the most important part. Even you can tape by your phone and see if you are using your nonverbal communication. Are you using your face? How was your voice and everything? I think that's the most important part. And I wish them best of luck. Well done for today. Thank you.
Thank you, Tugba. And John, what would be your takeaway on that? You're muted.
So I call it death by webinar. There is a lot of fatigue on Zoom. There's an overdose of it. I strongly believe that a strong product demo, it could be a video, could be a powerful way to actually demonstrate what you're doing and how it's different. And that's critical. And second is, all we have is the screen to actually make up our minds whether you're investment worthy or not worthy. How do you bring in some excitement, energy, drama to the entire thing? In fact, even today, I've done thousands of presentations, but I use a script. It's very, very important to create that and leave just 1 or 2 messages in people's mind. And that's the focus that can actually set you apart from somebody else. But both of you seem to have good products to solve, good problems to solve. So I wish you all the best, and thank you for listening patiently to me.
Thank you. So Anisha, do you have a couple of words before you run away?
Sure. I think there's a lot of online, online pitching events that are kind of occurring these days. And I echo Tuba's thoughts that it's very important. I mean, online or offline, I think it's extremely important to speak passionately about what you're doing, because like we have been speaking on this panel throughout, and everybody's been talking about, it's passion amongst founders that matters the most. And it'll be great to kind of ensure that that is there. Second is, while online fundraising events are great, it's important there to keep the audience occupied, keep their attention. And for that, it's important to make the presentations far more crisper. And like John said, have use cases, or have some material that keeps the audience engaged. If there's too much of content, too much of data out there, you may be losing your audience as well. So it's important for your content, be it verbal or the presentation, to be extremely crisp to retain the attention.
Thank you, Anisha. And Magnus, a couple of words from you.
Yeah, no, I think, I mean, the great thing with Zoom, obviously, and Arun and Jacob, you're probably doing this already, is that, people do have a little bit more time on their hands now, since they don't lose time in transportation. So I kind of feel like it's easier to get in front of people by utilizing your network and your contacts, which obviously you are doing right now, and I think everyone on this call is doing. It's a tad bit harder to convert people than it is in person. So, but net, I think actually, hopefully it ends up being kind of long-term productive in the way that you save a lot of time and you can get in front of more people. So, I'm very excited about this format, and I think it fits very well for your business model. And hopefully it's here to stay. And unfortunately need to jump, but great to meet you both, and very, very excited to help you if helpful. And also check out antler.co, people watching and listening as well, if you're excited about our support and help. Thank you.
Thank you, Magnus. And Gary, what's your?
Yeah, so, part of doing these online presentations is, as I had heard earlier, is a passion. So your voice, you don't want to have a monotone voice. You want to vary your voice and have some hand gestures, because you want to catch the attention. The other thing is, you want to have it as multimedia as possible, because the key is to be able to engage the audience. This is not going to change in the near term, and I think it's very efficient to be able to use Zoom in the right way. So make sure you do that. So captivating your audience, the same kind of thing it would do in person, varying your tone, powerful messages, storytelling, wow statements, revenue, the power of the team, the power of the advisors, those descriptive adjectives, use those in your presentation and you'll be successful. You both have, it sounds like interesting companies. Jacob and Arun, you've got interesting companies, but you got to, use the medium wisely, as Indiana Jones said a long time ago, and Harrison Ford. So I would go down through and just practice, practice, practice. What I did, by the way, is I actually took an acting course at Stanford, and so it was acting business, and that's how I learned how to present. So you're doing a great job, but let's get better.
Thank you, Gary. And John?
Nope, I think, I've enjoyed this. Both Arun and Jacob, you seem to be solving a problem that companies have. And in COVID times, marketing is one of the biggest pain points and also the biggest opportunities that you can crack. You need to demonstrate that, like I said, vertical by vertical. It is opportunistic, but Arun, scale has to go beyond opportunistic selling, because investors want to see that. Friends and families and advisors are great, but how do customers reach out to you? The minute you become a a pull versus a push business, I think you guys are on a roll. And the way I look at fundraise is, I look at fundraise for bootstrap companies. If you've arrived at a 20 to 30% month-on-month growth rate, it's a great time to actually look at it. So all the best, go for it, and happy to help.
Thank you for this add-on. And Nitin, what's your feedback?
These formats are great because we are investors in Zoom since 2019. So more webinars, more fatigue, more people. It's a very small audience. I just hope that people get addicted to it, and that's passion, and that's what I'm coming to. Your brand, your business, your work is successful if people are addicted to it. And John made a small point of pull versus push. We are pulled towards Zooms rather than pushed towards Zoom. We want to do it. Zoom has not asked us to download itself. We downloaded Zoom and started creating the premise. So I think, and that's the same which happened with WhatsApp. That's the same which happens with cigarettes as an addiction. But the most successful investors have been people who've invested in tobacco companies. But what I'm explaining is that it's the passion of the pull. And even as an investor, right? So, I mean, it's been 22 years of me dealing with public markets, but every Monday morning, I'm tired of Saturday, Sunday listening to my wife and daughter, because I know I want that bell of that market to go off at 9:15 in the morning, and I have to see what I have to buy or sell. So it's as simple as that. It's just, I can't explain it to you, but it's just that that's my life. I mean, even right now, the clock is at 7:07, and I'm looking at, oh God, US markets are opening, and what am I going to do? What earnings are going to come through? So, it's just a passion that I come across as, and thanks to platforms like LATOKEN, I've been able to meet people. I've reconnected with John. And, there are also businesses like Brigade. Brigade was a traditional real estate business. Now it's pivoting into, technology. Brigade Reap, I've spoken to Nurupa many times. We've had conversations. Keep on speaking to people. Keep on talking to people, because, that's how you learn. And nobody really knows it all, right? We just pick up things and what we know, and we build our own hypothesis. So always be humble about learning, and just make money. That's what I say to everyone. Just focus on that. The rest, everything is okay.
Thank you so much, Nitin. And Arun, congratulations with winning today's speech competition with a slight of a difference to Jacob. So you are then giving your feedback first. So what's your impression?
No, thank you very much for having us. I appreciate all the feedback and good comments all around. And I think interesting change of dynamics on Zoom for sure. So it's good to hear that there's opportunities there, and people are not getting fatigued about it quite yet. So that's great, and I appreciate all your advice.
And Jacob, what's your feedback and your experience with startup leaders clubs, competitions?
Yeah, it has been a great experience, great feedback. Trust me, it really helps us to improve the product proposition, our pitch deck, the way we present, and from offline to online, it's a very difficult journey. We are also getting adjusted to this, but overall, really, thankful to the whole team for this valuable feedback. Thank you very much.
Well, thank you all, and soon, just in a couple of hours, we'll have one more panel discussion for investor panel devoted to biotech and healthcare and medtech. So we all inspire you to join different formats of interaction between serial entrepreneurs and VC investors, such as roadshows, pitch competitions, which we currently have, Startup Leaders Club. You can also share your practices, experiences during keynotes, fireside chats, and panel discussions, masterclasses. So thank you all, and wish you all good luck, especially for the fundraising campaign of both of the projects, and our investors to have very nice investment targets, which will improve and actually succeed in the current environment. Thank you so